The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. The hearing today is titled the Semi-Annual Report of the Bureau of Consumer Financial Protection. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 4 minutes for the purposes of an opening statement. Good morning. The public's trust in our financial regulators is shaken. Earlier this year, a CFPB employee made an unauthorized transfer of records containing personally identifiable information and confidential supervisory information. Director Chopra, your agency subsequently tried to downplay this major data breach. We recently found out the OCC hired a fraud who repeatedly lied about his workplace experience to lead its Office of Financial Technology. The OCC also tried to sweep this incident under the rug. Finally, we are all aware of the allegations of widespread and entrenched workplace misconduct at the FDIC. These allegations directly implicate Chair Grunberg and span his almost 20-year tenure as leader of the agency. As CFPB director, you have a seat on the FDIC board, where you have made your presence known from the ouster of former FDIC Chair McWilliams to the March bank failures and the subsequent weeks of action thereafter. Well, in other words, you know what the heck is going on at the FDIC. Director Chopra, this committee is interested in hearing what you knew about the allegations when you knew it, and any actions you have taken to remedy this unacceptable situation. This string of scandals has left many, including myself, questioning whether these agencies are up to the task of protecting consumers and ensuring the safety and soundness of our financial system. When you're not dealing with internal mismanagement, the Biden administration supposedly has independent financial regulators that are busy serving as political actors for the administration. Director Chopra, your leadership is a glaring example of this alarming trend, becoming a hyper-partisan agency doing the bidding of the White House rather than protecting American consumers. That's much more about election year politics than about what is right for consumers. The ongoing barrage of press releases from the CFPB is misleading at best. They too often paint with a broad brush to vilify entire sectors of the financial services industry and even the U.S. financial system as a whole, rather than targeting independent bad actors. To make matters worse, where the Biden administration doesn't have the authority or votes in Congress to make a change, the CFPB under your leadership simply forges ahead and works unchecked. One need only look at your small business data collection rulemaking. The 1071 rule goes well beyond the CFPB's statutory authority to require the collection and reporting of onerous amounts of information in an attempt to facilitate the naming and shaming of lenders whose business activities are unfavorable to progressive activists. That's why House Republicans will pass a resolution this week to protect small businesses' access to affordable credit by rescinding the burdensome and overly complex rule. But I'd like to close on an area where I believe we've found some agreement, and that is a good thing. And that's on your work on the 1033 data privacy proposal. We've talked about this in private. To be clear, I think it's far from perfect, what you've proposed, but I believe there's common ground between your proposal and the Data Privacy Act that this committee passed earlier this year. We agree on the core of the issue. Americans should have greater control over their sensitive financial data. Consumers should know where their data is going, how it's used, and be able to terminate collection of their data by certain firms. To ensure our data privacy policy is not subject to the whims of any administration, I believe it's critical that we make law here, not just regulation, though your regulation is a good step. I hope we can work constructively on this issue moving forward so Americans' financial data privacy is protected for the long term. And with that, I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters, for 4 minutes.
Thank you very much, Mr. Chairman. Good morning. I'd like to welcome Director Rohit Chopra back to our committee and applaud the excellent work the CFPB has done under your leadership to protect our nation's consumers. I'm also pleased that this coming Saturday, Director Chopra will join me in my district in Los Angeles for a town hall meeting with my constituents to discuss consumer protections and access to banking products and services. We will also hear from senior executives from Wells Fargo, PNC Bank, City National Bank, and local stakeholders. While the Senate is moving forward with a hearing featuring big bank CEOs next week, I'm very disappointed that this committee is breaking with the tradition I established as chairwoman to hold the same hearing. Our members deserve the same opportunity to conduct oversight of our nation's big banks. I hope the chairman will reconsider his decision and convene the CEOs for a hearing as soon as possible. Now, as the Solicitor General argued before the Supreme Court in October, the CFPB's funding structure is constitutional and gutting the only agency dedicated to protecting our nation's consumers in the financial marketplace will harm our economy and communities. The lawsuit before the Supreme Court is a part of a broader extremist effort by House Republicans to undermine and defund critical government agencies and programs, even Social Security and Medicare. To be clear, every single court that have reviewed CFPB's funding has reaffirmed its validity, other than the extremist Fifth Circuit. Committee Democrats urge our nation's justices to stand with the 82% of Americans, including 77% of Republicans, who want the agency to continue doing its job. It is no mystery why the CFPB has such broad bipartisan support. It has cracked down on financial institutions that repeatedly engaged in abusive practices, held lenders accountable for discriminating against borrowers, taken action to remove medical debt from credit reports, eliminated junk fees, increased access to capital for small businesses, particularly businesses of color, and more. Unfortunately, this week, House Republicans have launched an effort to harm small businesses and help the big banks continue to price gouge them by overturning CFPB's small business lending rule, which implements Section 1071 of the Dodd-Frank Act that I worked on with Small Business Committee Ranking Member Nydia Velasquez. This sector requires lenders to collect and report data on small business lending, similar to what they already do for mortgage lending. This would help reduce borrowing costs for small businesses by creating a more transparent, competitive marketplace and combat discriminatory lending practices. I'm disappointed that Republicans are moving forward with this anti-small business effort, and I would remind my colleagues that market transparency is a fundamental pillar of free market capitalism, and that is exactly what this rule is focused on. So I look forward to hearing from Director Chopra about the importance of this rule and the other good work of the CFPB. I yield back.
The lady yields back. The chair now recognizes Mr. Barr, the chairman of the Subcommittee on Financial Institutions and Monetary Policy.
The CFPB is the most unaccountable agency in the entire federal bureaucracy. And it's not just about Director Chopra, it's the structure. But Director Chopra, under your leadership, the agency has acted unilaterally and arbitrarily outside any statutory mandate. And we've seen time and time again the Bureau, under you and your predecessors, pursue a lawless regulations without rules approach, and an attempt to change the law without congressional authorization and without complying with the Administrative Procedures Act. This has not only led to a lack of accountability by the agency and a lack of accountability to the American people, but it's also harmed the very consumers that, sir, your agency is supposed to protect. Due to the CFPB's novel funding mechanism, Congress has no visibility into the agency, and Congress needs to regain its power of the purse, subject the Bureau to the congressional appropriations process, and rein in this regulator. And you may have noticed that Congress rejected an amendment to defund the agency. We just need to fund the agency the right way, the constitutional way, and that is through the power of the purse, so that the agency becomes a professional, nonpartisan regulator, not a partisan regulator that acts outside of the law. And with that, we will bring light to this today. I yield back.
Gentleman yields back. The chair now recognizes the ranking member of the Subcommittee on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Mr. Chairman and Director Chopra. Since we passed the Dodd-Frank Act that created the CFPB back in 2010, the CFPB has effectively fulfilled its mission to protect consumers from unfair, deceptive, and abusive practices in financial markets, despite coming under continual attack. And despite those attacks, the CFPB has continued its work, securing over $20 billion in relief for harmed consumers, over $4 billion in penalties for violations of the law, and millions of responses to consumer complaints, all while adapting its supervisory activities to a rapidly changing financial sector. And the public understands, as the ranking member pointed out, over 82% of Americans and 77% of Republicans support the mission of the CFPB. And as our financial system becomes more digitalized and complex, so do the scams and abuses and junk fees that threaten the life savings of the American people. So I encourage you to stay vigilant to our new challenges, and thank you for joining us today. Yield back.
Gentleman yields back. Today, we welcome the testimony of the Honorable Rohit Chopra, Director of the Consumer Financial Protection Bureau. We wish it was a board. Director Chopra, thank you for being here. You'll have 5 minutes for an oral presentation of your testimony. And without objection, your written testimony will be made part of the record. You're now recognized for 5 minutes.
Thank you, Mr. Chairman, Ranking Member Waters, and members of the committee. I appreciate you holding this hearing today. This is my 25th appearance before Congress in my career, and I'm grateful to many of you on this committee on both sides of the aisle to taking time to meet with me and provide advice to the CFPB to address the challenges and opportunities we must all tackle: protecting sensitive personal financial data, reducing credit reporting errors, preserving relationship banking, giving consumers more choice, and so much more. Since I was here in June, I'm pleased to share that the CFPB has reached milestones on many of these issues, like accelerating open banking in the U.S. and protecting financial privacy, while continuing to enforce the law fairly and deliver results for consumers and law-abiding businesses. Today, I want to share some observations about household financial stability and highlight some progress on areas of work. As we enter the holiday season after a sustained period of higher interest rates, the CFPB is sharpening its focus on the evolving patterns of household debt. And over the past few years, borrowing has accelerated across many key product segments. Americans now owe more than $17 trillion in household debt. Total outstanding credit card debt eclipsed $1 trillion last year for the first time since the CFPB began tracking it. Auto loans have grown quickly to an estimated $1.6 trillion. The CFPB's analyses have found that rates and fees can contribute to persistent credit card debt for a growing number of consumers. They paid $130 billion in interest and fees on credit cards last year, while annual percentage rates rose far above the cost of offering credit. And the CFPB is taking a number of steps to give consumers the ability to switch and take advantage of new offers. The return to payment for federal student loans continues to be an area that we are monitoring, particularly the effect on other loan obligations, like auto, credit card, and others. Outstanding auto loan debt has grown, particularly given the higher cost of vehicles during the pandemic and higher interest rates. These payments are consuming a greater share of income for many consumers, and we're actively monitoring credit performance. Residential mortgage activity has unsurprisingly declined. The decline has been precipitous, while interest rates, fees, discount points, and other costs have increased. The result is that home buyers have been paying much more. The CFPB is looking for ways to facilitate more refinancing activity if and when prevailing mortgage interest rates subside, to ensure that borrowers who experience financial distress can navigate alternatives to foreclosure and we're looking to streamline rules and procedures for servicers who are offering loan modifications. Since our semi-annual report, the CFPB has proposed a rule, as the chairman mentioned, under Section 1033 to accelerate the shift to what is known as open banking in the United States. We've also initiated a process, an early part of the process, to improve accuracy in credit reporting, especially for data brokers. We're also taking steps to address very widespread inaccuracies on credit reports when it comes to medical bills. The CFPB's supervision and enforcement program is protecting both consumers and honest firms who must compete against those who egregiously violate the law. In the last 2 years, we've obtained orders totaling $8 billion in victim redress and penalties. We're tackling junk fees that have been creeping across sectors of the economy and interfering with consumer choice. The CFPB has even shifted its supervisory resources toward many of the non-banks who account for a growing role of financial services today. We've also proposed a rule to ensure that many of these large non-bank companies adhere to the same rules that banks, credit unions, and other financial institutions do. In August, our complaint database reached 4 million submissions, and I'm proud of the CFPB's work in getting consumers the resolutions they deserve, often through referrals from local organizations, your offices, and many others. Again, Chairman McHenry, I want to thank you for the opportunity to appear before you today. We value all of your input, and I look forward to your questions.
Well, thank you. I now recognize myself for 5 minutes. Director Chopra, as I mentioned in my opening statement, I think we have some alignment here on updating data privacy standards. And your implementation on Section 1033, you know the importance of empowering consumers to exercise their full data rights without being trapped by powerful incumbents and without losing control of the data. How does your proposal ensure that consumers can exercise their full control over their financial data?
So pursuant to the statute, the rule requires that consumers are able to permission their sensitive personal financial data, and to prevent it being exploited by other actors, we've put some safeguards to ensure that it's being permissioned only for the purpose of those financial services. I hope, Chairman McHenry, also you can legislate and figure out ways to address privacy more broadly. Like you mentioned, this rule is just one piece, but I think a legislative framework on privacy would be hugely valuable.
Yeah, and you allow for an opt-in provision. You ban the secondary use. I mean, there's some really smart stuff that you've approached this as, and taking inputs from a wide variety of people.
Yes,
so
and we looked a lot about the discussions you all have had, especially where there's agreement. I really want this to be durable, to last. I think it is important to restrict secondary use. If you shouldn't be able to bait someone to get their sensitive data and then use it for a totally different
So is there a way for companies to use anonymized data from that they've captured from consumers in order to build new products? Do you think that's a viable use?
So that's a place where we are looking specifically for input on. One of the challenges that we're dealing with in today's modern market is re-identification is becoming easier to do, particularly with very advanced artificial intelligence. So I think that's a challenge we're going to have to encounter and wrestle with through this process.
Okay. Well, I look forward to continuing that conversation. Now, you, as I've asked other financial regulators, this summer you announced that you've had discussions with the European Commission, and you, quote, started a dialogue, end quote, on consumer financial protection issues. Under what authority are you taking those actions for those negotiations?
So just to be clear, I think many of the developed economies are seeing the growing role of China, Chinese technology firms, and financial data in the world. We are seeing that we have many issues in common when it comes to surveillance, when it comes to payments. So this, just to be clear, is a meeting, One of my predecessors, Acting Director Mulvaney, launched an initiative to join a global financial innovation network. So again, we see this as a way to understand what other economies are doing, especially when it comes to
So
open.
along those lines, they actually had public disclosures about those conversations, Director Kraninger, Director Mulvaney. Do you intend to provide meeting minutes or any sort of public disclosure on what those
Yeah, we'll try and make sure that we provide, transparency as to what is being discussed. I think the purpose of it, again, is as we're seeing data being a growing factor in especially financial services, the UK, Europe, all of us are dealing with new ways of fraud, especially generative AI fraud, so we're really happy to do it.
Yeah, but from our perspective, what we want to know is what you're doing in your job and whether or not our existing rules require disclosures for these international bodies. And I'm asking you this specifically because your bureau is doing this just like other financial regulators and providing nothing in the way of disclosures around that, other than announce that you're having the conversations. We'd like the transparency.
Okay.
Finally, digital assets. Under your proposed rulemaking, you interpret the word funds to include digital assets. Walk me through your thinking on that proposed rulemaking, but let's start with this. How many firms do you think you're touching with your notice proposed rulemaking?
So we put an estimate. We believe it's the largest tranche, and many of them are going to be known to you. These are large firms that have non-bank payment apps, essentially. I think with respect to the definition, we have seen a number of court decisions that have sought to interpret the meaning of funds. And Mr. Chairman, we've taken a very judicious approach to this to essentially focus on what is really being used as a consumer payment, not other digital asset uses, especially in wholesale or trading or anything. We're really talking about a payment, and I know you all are thinking through stable coins and payments. We really welcome the discussion on that as well.
I now recognize, thank you, and I now recognize the ranking member for 5 minutes.
Thank you very much, Mr. Chairman. Director Chopra, as I mentioned in my opening statement more than a decade ago, I worked closely with Congresswoman Velasquez to ensure the Dodd-Frank Act included Section 1071 so that we could shine a bright light on the small business lending market. Unfortunately, we have seen time and time again how some small businesses and their borrowers, especially those that are minority-owned, women-owned, or in rural areas, have charged more than they should be charging if their application was not denied in the first place. As you know, I have long been disappointed that the Section 1071 rule took more than a decade to complete. Others were frustrated too, including Rishonda Young, a Black woman who founded Popcorn Heaven, a small business selling gourmet popcorn in Waterloo, Iowa in 2014. She joined others to successfully sue the CFPB during the Trump administration to compel the agency to complete the rulemaking. Ms. Young explained that she was the victim of a discriminatory lending practice, saying, quote, "In several instances, there was just blatant discrimination, and in other cases, I found out about it later on, and it wasn't just me," end quote. After the CFPB, then led by a Trump appointee, agreed to a court-supervised settlement to complete the rulemaking, Ms. Young said, and I quote again, "I'm just really humble to be part of the process. Sometimes we feel so small that this is one of those things that shows if we're willing to speak up, we actually can make a difference," end quote. Ms. Young has since sold her business and is now working with other investors to open the first Black-owned bank in Iowa with the goal of being certified as a CDFI and offering small business loans in a more equitable manner than she was served. Director Chopra, do you believe Congress should ignore entrepreneurs like Ms. Young and vote to rescind the CFPB's small business transparency rule, specifically who wins and who loses if the small business lending market continues to be opaque?
Well, I think the pandemic showed how important small business were in our economy, and so many entrepreneurs who struggled to get loans. And so I think a key way to make sure we have a small business loan market free of discriminatory practices, it's so important. We've done this in mortgage, and I think Congress has told the CFPB, let's do this in small business.
And Director Chopra, would you also briefly discuss how the final rule minimizes the impact on community banks and credit unions?
So we took a number of steps during the comment period to reduce many of the questions that are being asked. We took steps to extend when they would have to comply with it. We were under a court order. We completed our requirement under that court order in time, but our goal is to really make sure there is a lot of support to make sure that the smallest institutions can comply with this, and we also exempted a substantial number of them who do not make many small business loans.
Director Chopra, the CFPB issued guidance in October to implement Section 1034C of Dodd-Frank, which generally prohibits large banks and credit unions from charging fees to provide basic account information to a consumer about their own account when they request it. Would you discuss the type of fees banks are charging consumers to access their own information and how you would expect this new guidance will help ensure financial institutions follow the law and do not impose these type of junk fees on consumers?
You know, it's so important. If we want consumers to be able to manage their financial lives, they need to be able to get the basic information about their accounts. And Congress made clear in the act that large institutions cannot throw up big barriers or create obstacle courses for people to get that information. So we've seen a number of fees that may be unreasonable. We've even seen a fake paper statement fee where they neither printed the statement nor mailed it. So we're trying to make sure the law is being followed with fidelity.
Well, thank you very much, Director Chopra. You're doing a fantastic job. I'm so pleased that you're there heading the CFPB, and I yield back the balance of my time.
The gentleman from Arkansas, Mr. Hill, the vice chair of the committee, is now recognized for 5 minutes.
Thank you, Chairman. Director, good to have you back. I wanted to pick up on a couple of topics that we started on in June and follow up on 1033, continue that conversation. And of course, that rule is rooted in the statute of Dodd-Frank, and I grant that. But we've had 13 years to think about what the right direction is and get it. And I want to see that we get it right the first time. And so we've had a couple of good discussions about that, but I want to continue that. When you testified in June, I asked you about the scope being considered for this proposal, which hasn't changed from SOBREFRA, Reg E, Reg Z, or the topic, and your focus on transaction data. But the proposal goes on, as it's now been released, and says supplemental rulemaking might come out for other covered persons and consumer financial products or services. So we've had 13 years, and the agency's covered this and talked about it, and Congress has for 13 years. So why leave that open-ended, perpetual rulemaking potential? What other covered persons and products or services besides EBT did the CFPB consider but ultimately decide against including in the proposal?
Yeah, so, I like to follow in some ways a 80-20 rule, which is what can we get the most benefit for, and really start seeing it to get moving. And what we found was that transaction data of your bank account, credit card that was really going to power much of open banking in the U.S. And even, let's say, your auto loan or mortgage loan payment, that's often typically still reflected in your transaction account. So when it comes to mortgage, auto, other places, that's a lot of other financial institutions. And so we wanted to make sure we studied that a little bit more and to see how much additional data it would actually provide. So I appreciate what you're saying.
Yeah. Well, the second issue I raised in June and you did not have an answer to, and now we have a proposal, which is data breach liability. So where have you come ashore on who bears the liability for a data breach?
So generally speaking, when a consumer permissions their data, they're handing over their data to that new financial institution. We got some feedback that they wanted the rule to have some specific regulatory text on liability generally. I think one challenge is that we can't necessarily provide liability protection for every single law that exists. We're trying to figure out under which of our statutes can we make sure it's absolutely clear that it's the receiving institution that really bears, is responsible for handling that data. And in the data handling section of the rule, we do specify the requirements that the receiving firm would have. So I don't know if we got it perfectly right. We definitely want to hear feedback
Well,
on this.
we'll look at that, and we may be in follow-up on that. Let me switch gears. In the last few days, you've issued a new rule, large participants proposal by the agency, and it has new supervisory oversight over non-banks offering digital payments and wallets. It's a pretty major step since you're really an enforcement agency, not a supervisory agency, I would say principally. The proposal threshold for this supervisory oversight is based on the annual volume of consumer payment transactions. So I'm not going to debate that, whether it's $1 million or $5 million. I'm more curious about some clarity about who's covered. So I assume that 6 companies named in October orders are included: Amazon, Apple, Google, Meta, PayPal, and Square. Is that right?
So again, that's currently a proposal, and let me just share, Congressman Hill, we devote way more resources to supervision, and the rule we've proposed—
Well, you can write me the answer to that. You can comment on that, but let's talk about this question.
no, I'm trying to get to you.
Yeah, but I want to get to it.
So the top firms, what we have proposed is a threshold for which, if they're above that, they would be subject to supervision.
Well, who's left besides the ones that were named in October? Are big retailers covered on
So
this?
again, it's not a matter of public record always how many transactions or customers they have. So what we're trying to do is get comment on the threshold, and then we would then be able to determine who's above that. But if I were to speculate, and I'm just speculating, the most popular non-bank payment apps would be covered.
Okay, well, I look forward to following up with you on this,
course.
Mr. Chairman. I yield back.
Gentleman yields back. The gentlewoman from New York, Ms. Velasquez, is recognized for 5 minutes.
Thank you, Mr. Chairman and Ranking Member. Welcome to the committee, Director Chopra, and it is really good to see you. And I just want to say that I really appreciate the CFPB's work protecting consumers, including service members, older adults, and my constituents. And I want to join with Ranking Member Water in our disappointment of the Republicans' attempt to overturn Section 1071 rule. Let me state for the record that as the ranking member on the Small Business Committee, I strongly support Section 1071 rule. Mr. Chopra, I was very pleased to see the joint statement on immigration status the CFPB and the Department of Justice issued. Is this based on new information?
No, this is long-standing law from the Justice Department and the CFPB.
So, to be clear, does the joint statement tell banks they have to make loans to immigrants?
No, the CFPB, the DOJ, we do not tell anyone to make a loan to a particular person.
And can banks still consider an applicant's immigration status?
Yes, the guidance makes very clear that a creditor may consider immigration status when making a lending decision.
And so why did the CFPB issue this joint statement now?
Well, it was clear that based on feedback from lenders, there was court decisions and adjudications that raised some questions about the use of immigration status. We affirmed that you can use immigration status, but at the same time wanted to make sure that it was clear that national origin discrimination is completely prohibited.
Well, I want to thank you for issuing guidance. As ranking member of the Small Business Committee, I know that smaller institutions often cannot afford an army of lobbyists and big law firms. so more guidance is especially helpful for them. I also know that discrimination on the basis of race, national origin, or immigration status, unfortunately, is still very much present today, and I take it very seriously. I know what it's like to be judged by your name and stereotyped as a member of an ethnicity. I understand you recently took an enforcement action involving a blatant, intentional, egregious discrimination case against a population group that is prominently represented in New York City. As a proud member of the caucus that championed them, along with about 100 of my bipartisan colleagues, can you please tell me about cities' discrimination against Armenian Americans?
So we recently finalized an enforcement action that addressed intentional discrimination against Armenian Americans in Citibank's credit card business. They had a policy of essentially disqualifying anyone whose name has a suffix of YAN or IAN. That's extremely common in Armenian Americans. And in many cases, Citibank provided false records about why those borrowers were denied and made up other reasons for it. So again, I think our guidance tries to make clear you can use immigration status, but you can't engage in national origin discrimination.
Thank you. Mr. Chairman, I yield back.
The lady yields back. The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Mr. Chairman and Director. As you know, the House will vote this week on a Congressional Review Act resolution of disapproval to the CFPB's rule on small business lending, led by my colleague, Chairman Roger Williams. The Senate has already passed this resolution, which required a bipartisan vote. And while Congress is working to rescind the final rule, it seems this may be decided ultimately by the courts. In the meantime, I'd like to focus on one aspect of the final rule that I'd appreciate clarification on. The Paperwork Reduction Act requires agencies to determine the total paperwork burden by hours of major rulemakings. This measures the time required to generate and provide the requested information of the rule. CFPB estimated the total annual burden hours imposed by this final rule to be 8,302,000. That's the equivalent of 947 years. Director Chopra, would you discuss how the CFPB balances the compliance burden with the value of the paperwork being produced? Because 8 million hours is a lot of time.
Yeah, so we try and analyze various ways to reduce the burden, and in the rule, we actually provided different flexibilities. They don't have to use a particular form. But in this case, Congressman, we were under a court order to complete the rule. It was a statutory mandate, so we knew we had to do it. And we tried to look at various ways that firms could be able to use industry associations to help them collect it. So we always are looking at analyzing what kind of burden there is when thinking about how we ultimately implement.
But broadly speaking, Director, how can CFPB best maximize the utility and the quality of information received while minimizing, to the extent possible, the paperwork burden imposed on the American public?
Yeah, so we put a lot of thought into this, and I've had a discussion with a few of you. One of the reasons why these rules can often create a lot of burden is when they're excessively complex. And I think overall, we need to continue to shift to rules that are very bright line, that they're in or out, that we can reduce the amount of overall kind of thinking about how to actually deal with it. In some cases, it's hard. Congress may specify certain aspects that need to be done, but we are looking at simplification wherever we can.
I am by training a director and ag economist, and our main focus on making sure that we have enough food and fiber to meet our needs in this country and in this world. But economics by its nature is how do you allocate those finite resources among the unlimited demands to maximize the return. Is there a volume of reporting that outweighs the cost, I guess is what I'm asking. Just asking for every conceivable bit of information doesn't necessarily add to the quality of the result. Do you have economists? Do you have people who work on those calculations, as opposed to just how much information can we squeeze out of people? But the value of it, again, the volume, when it outweighs the cost?
Yes, so we have an office of research where we have economists who help to look at all of this, and under the regulatory flexibility analysis that we're required to do, we talk through that. I will share, though, in terms of putting value on the benefits, that also can sometimes be hard to give a benefit for a number to not being, illegally discriminated against, or, put in a loan that was unlawful. So we try our best, but I won't say that it's the easiest thing always. But we put a lot of rigor into what we're doing.
Director, that with the vote in the United States Senate and the efforts of Chairman Williams here in the House, Congress is going to send a very clear signal to you about how to address these issues. And I hope that the agency will be responsive. But we shouldn't make the best job guarantee in the history of the world being a compliance officer at some financial institution. And that appears to be what we've done, is provided job security for the folks who deal with these 8 million hours of paperwork. And I'm not sure that adds to the quality of life of my constituents. And with that, I yield back, Mr. Chairman.
Gentleman yields back. The gentleman from California, Mr. Sherman, is now recognized for 5 minutes.
Mr. Director, I want to join with the ranking member and others in commending you for an outstanding job. You've dealt with 4 million consumer complaints, returned $17.5 billion to consumers. Just your rule on overdraft protection, saving consumers $5 billion. And that's just the tip of the iceberg, because when you take action, you not only return money to wrong consumers, you deter bad practices through the whole industry so the consumers don't get ripped off in the first place. I want to commend your efforts on junk fees. Because of my focus on capital markets, I digress a little bit and mention that unfortunately the SEC is thinking of adding a junk fee to mutual fund investors, or many of them, but that's not the focus of this hearing. I also want to say that I'm pretty confident that the Supreme Court, relatively confident the Supreme Court will uphold your structure. It is so necessary to make sure that you're have the independence you need to do the good work that you've been doing. I'm also pleased that you issued proposed rules dealing with PACE loans. These loans seem to have perhaps a well-intentioned purpose, but are used by those who are predatory. My home state of California took action in 2017. Your rule builds on that work in California, providing not only the Truth in Lending Act protection, but especially those ability to repay determinations. Can I count on you not to weaken the rule as we get from proposed to final?
Yeah, it's currently under process, but let me just say the ability to pay rules are very, very important to make sure that that rulemaking meets its intended purposes. I completely share your view that there's a lot of well-intentioned elements of PACE lending, but it can also lead to a lot of abuse.
We've got these debt settlement companies that claim that they'll have you pay off your debt without having to pay the amount you owe. Your website says that these companies, dealing with them can be risky. Some of these companies are discouraging consumers from making payments, causing them to default, even encouraging them to take on additional debt. What can you do about those who are advising people to not to pay what they owe, and to even incur more debt they can't afford to repay?
Well, certainly we've seen a number of issues where consumers are seeking help, but instead they become worse off. We recently finalized an order, we went to court to get it, against one of the largest debt repair conglomerates and obtained a judgment close to $3 billion. So we continue to try and monitor what are the vectors in which people are being defrauded. We understand that there may be an uptick soon because TikTok will be allowing more ads on this business. So we're very much monitoring the situation.
Just another reason to be wary of TikTok. We've got a real concern about know your customer, anti-money laundering, 1.1 million reports of identity theft. There's a thing called the credit header data, which is just the name and address and social security number, nothing else in the credit report. These are being used by financial institutions in order to make, to verify identity and to prevent identity theft and to comply with the Know Your Customer laws. There is some discussion in your agency to qualify just this name, address, social security report as a consumer report. Will this adversely affect the ability to prevent identity theft and compliance with Know Your Customer law?
No, I appreciate the question, and we have not proposed anything on this. We do not want to do anything that would jeopardize a financial institution's ability to really crack down on identity theft. I think certainly, though, we know that this data is being used outside of financial institutions, including to steal people's identity. So I think that's what we're looking at with respect to data brokers and how we might handle some of this. But again, we have not proposed anything on this front.
And finally, I hope you'll make sure that you've got protection for privacy as you move forward with these Section 1071 rules, and I yield back.
Gentleman's time has expired. We'll now go to the gentleman from Texas, Mr. Sessions, for 5 minutes.
Mr. Chairman, thank you very much. Director Chopra, good to see you. I must applaud you for your glibness and your ability to effectively take questions on both sides of this, from both sides of this committee, and to respectfully offer back your viewpoints. So I want to offer that to you because I appreciate
that.
Forthrightness. Mr. Director, as you know, the Wall Street Journal yesterday or the day before put an article out, the CFPB targets an anti-terror tool. And essentially it's talking about selling credit header data to law enforcement. But it also, if they had written another article, been more specific also about credit information that would be available about what might be criminal history, that people who are going to lend money would have that opportunity to buy this data and information as they chose. At the time they're going to give someone money, offer a loan. If you could please address both of those circumstances, because it seems like you're on the wrong side, at least in my opinion, of this issue.
Yeah, well, and to be clear, we have not proposed anything. I take very seriously the harms that we need to, we're a law enforcement agency as well. We need to be able to identify bad actors. You know, it's been nearly 4 years since then Attorney General Barr indicted 3 members of the Chinese People's Liberation Army with respect to Equifax. There's no question that sensitive data about each of us can not just be used to steal identities, but also for use by state and non-state actors. So I think we want to make sure that data is being used in ways that is appropriate here in the US. So there's not an effort to stop law enforcement or, as Congressman Sherman mentioned, to help financial institutions detect money launderers. But we also need to think
about other criminal history.
So on criminal history, I actually haven't heard a reference to anything we've been doing on criminal history. Generally speaking, any sort of background report that include in a credit report, tenant screening report, employment background check, you know, the only requirements that currently exist right now is that that data be accurate. If it's a consumer reporting agency, there's rights to dispute. So I'm happy to talk about with you separately, but I'm not familiar about the restrictions.
I'll just do it right here. I'm going to ask unanimous consent to put into the record, Mr. Chairman, 2 articles. Number 1, CFP targets an anti-terror tool that appeared in the Wall Street Journal, and remarks of CFP Director Chopra at the White House Roundtable on protecting Americans from harmful data broker practices.
Without objection.
That is offered by the CFPB website, August 15, 2023.
Without objection.
Thank you very much, Mr. Chairman. Director, I think that the reason why we get specific about these items on both sides of the aisle is that we find that there's happy talk conversation between us and then something different appears, as in what might be the 1071 debacle that our colleague, my baseball coach, Roger Williams, chairman of the Small Business Committee, is headed up yesterday at the Rules Committee. Great discussion, great dialogue, but we're going to vote on it today. It received 5 Democratic votes in the United States Senate, I think earlier in October. My point is that I would like to, and I think you've offered this to me, conversation about these pending matters. And while I do say that while you offered that to me, sometimes in our haste, we do it here. But I would like to have conversation about this because I think it would be in everyone's best interest, including the CFPB, that we see these rollout of ideas closer to the same way.
Well, I want to do that, and I think the chairman also mentioned, this also relates to privacy, Fourth Amendment, there's all sorts of issues. Always the best thing is when you can legislate on it.
Yes,
And
sir.
we're
Well,
very happy to do that, because the truth is,
Yes,
once
sir.
you
Well,
legislate on it,
The
it's...
Fourth Amendment is about privacy, but it's also about somebody not taking your data and information.
That's correct.
Without a court order.
Gentleman's time's expired.
Thank you very much. Mr. Director, thank you.
The
Mr.
gentleman
Chairman,
from
thank you.
Georgia, Mr. Scott, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Director Chopra, I want to begin by expressing my strong support to you and to your staff at the CFPB for ensuring that Americans' data is accurate and secure. You're doing a great job. In March of this year, the CFPB issued an RFI, Request for Information on Data Broker Practices. And you asked for information about how this market works and what consumers' experiences are with the data brokers. And I understand you received over 7,000 comments. And overwhelmingly, comments from consumers express frustration with the lack of control over who has access to their data, who uses their data, and who is sharing their data, and comments over the difficulty consumers have with opting out of having their data shared, even when they can identify data brokers, were also raised. And that data broker practices result in large amounts of unwanted spam, marketing calls, emails, and worst of all, leave people vulnerable to identity theft, data breaches. So, I know there's been some confusion about the Bureau's work in relationship to data brokers from some of my Republican friends. So, can you explain how the comments received in the RFI, Request for Information, informing the CFP's work is going forward?
Well, I appreciate that, and let me just say that I think it's becoming increasingly scary about the types of dossiers about us online. Geolocation, religious attendance, very sensitive data being compiled and often sold. The Fair Credit Reporting Act is our core statute for ensuring that those dossiers have some degree of transparency that they're accurate, that people can dispute it. And so we're trying to figure out what is the right way to make sure in the modern data broker industry that there is some even-handed consumer protection. We have a lot of firms who follow that clearly, and we want to make sure that we're providing the appropriate clarity so we don't have an out-of-control system. And I will share that a lot of these are being used and purchased by people overseas, and it is a huge vector for stealing identities and scamming people.
Well, let me ask you this important question to all of us, and that is this. We're all concerned about the extent to which data brokers are collecting and selling children's data, the big thing going on, and allowing the children's data to be used for marketing, targeting, and worse. And one recent study found that 67% of phone applications used by very young children collected highly sensitive data and then transmitted this data to third parties. Tell us about this.
Well, I think this is something, many years ago, Congress passed the Children's Online Privacy Protection Act. And I think with the advent of more data brokers, kids and seniors, I think, are going to be very important for us to think about how we safeguard, their sensitive data. So, look, there is work on this committee I think you can all do. We are happy to really work with you to figure out what's all the solutions we can get, because collecting all of this kids' data, too, when they're an adult, can just be another way to defraud people.
We really got to look out for our young people, our future generation, and make sure they're educated properly and that their interest is protected when it comes to this new technology. Thank you, Mr. Chairman.
The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Many of the omnipresent defenders of the non-existent problems of the people talk about all the junk fees you've eliminated. So would you tell us what a junk fee is?
Well, junk fees are ones that are typically not subject to the competitive process. You have to click through the screen, you find them at the end. Sometimes they're for a service that doesn't even really exist. Sometimes they're just completely hidden and random. So there's lots of different ones. We've really tried to focus.
Okay, can you give me a couple examples of those?
So, for example, I mentioned to one of your colleagues, we identified in one of our examinations and similar other places a paper statement fee that was charged on a recurring basis where the financial institution did not even print out a piece of paper, nor did they mail it. So there's a bunch of things that we see.
That just sounds like a fraud. Is there a statutory definition? Have you put in the statute somewhere a definition of a junk fee so we know exactly what we're talking about?
No, but we've tried to really articulate through the various laws that we enforce where certain fees may not be permitted under existing law. So, for example,
don't you think you should articulate those more clearly, or put them in writing so everyone knows what
we are
junk fee
trying
is?
to. We're trying to take the feedback of where we should be issuing guidance on this. Overall, I would say the market has really moved in many ways and are being more clear about how fees are being assessed. That's very, very good progress. But inasmuch that there's particular places you think we need to issue more guidance, we're very, very open to it. We have published some information where we give examples of what we have uncovered in enforcement and exams that in some ways have been pretty egregious violations.
How do you assess the impact of your regulations on the cost of access to credit?
Big picture, or as it relates to fees, or?
Big picture.
Big picture. So I think, as I mentioned to your colleague, we try and really look and have fidelity to the competitive market. We really want people to be able to compete and compete for business, and that it's clear what the product they're getting and the price they're getting. So often when we can make the cost...
Does that involve assessing the cumulative impact on the entire system of regulations?
Yeah, so one of the places of feedback that, you know, in all my meetings with industry and that you all have given, we all need to be thinking about all of the issues together. The CFPB is not the only one.
Would you describe your process for considering the cumulative impact of your regulations on the access to credit?
So we have a requirement under the statute, I believe it's the Regulatory Flexibility Act. We have to conduct an analysis about the impact of regulations, and of course, we have to look at that in the context of other ones that are current or being implemented. So we, in our proposed rules, we tend to outline that, and we include some data and estimates. We get comment on it and try and be able to refine based on that input.
How do you use your cost-benefit analysis? Do you do cost-benefit analysis if any of your regulations have risen to that level?
Sorry, I couldn't hear a little bit. Do we do it?
I said, have you done any cost-benefit analyses? Have any of your regulations risen to that level?
Risen to that level. So as I
Yeah,
mentioned,
the standard, the government says you can write a ridiculous rule, but if it doesn't harm people to the tune of over $100 million.
right, so the path we follow is really what's spelled out in the statute. So as I mentioned, in the proposed rule, we have to spell out what the costs, we articulate what the benefits are, and we follow exactly what is in the statute. And we even collect comment on the analysis as well.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. The gentleman from Illinois, Mr. Foster, is now recognized for 5 minutes.
Thank you, Mr. Chair and Director Chopra. You know, I was very encouraged to hear of my Republican colleagues' support for the mission of your thing, that they agree with, you know, roughly 80% of Americans that you're doing something useful here, and I find that especially reassuring in light of the fact that earlier this month, Republicans voted 140 to 78 to completely defund the CFPB. So I'll just leave that there. However, you know, we've also heard a lot about the number of hours of have to be spent on compliance as a real cost here. Do you also track the number of hours that consumers lose, for example, through ID fraud, when they have to spend all afternoon on hold as replacing all their credit cards?
It can be very hard, but we know there's been some reports that show the enormous amount of cost to consumers, not even counting their time of dealing with identity theft, credit reporting errors, going back and forth about inaccuracies. It's an enormous amount of time.
That's right, but quantifying it in the number of hours. If you could make an attempt to quantify the number of consumer hours that are sort of on the other side of the scale here, that would.
We do know that there are millions of disputes filed on credit reporting related issues, which does involve a multi-step process.
And so you multiply that by the average time the consumer wastes with a mistake on their credit file, and that's an interesting, it's, you know, we have to balance everything, and that's an important weight to put on the other side. I've been really encouraged to see that you've raised the alarm over AI and where that's taking the whole thing. You know, the leading edge of this is probably AI-enabled deepfake impersonations, which is going to have to result in our really raising the bar on secure digital identity and proving you are who you say you are. Where do you see that going? And
well, let me just say that I really strongly support any efforts you all can make when it comes to getting better digital identity verification. The amount that we would save businesses and consumers in fraud would be enormous. I don't know how to do it necessarily, but using just a publicly available information about someone to authenticate, and when we add in generative AI, you know, we do have firms that allow you to authenticate into their system with your voice. You as public officials, it is becoming very easy to clone all of your voices, because once it's in public domain, there's a data set to be able to duplicate it. So we got to make sure that we're not opening up even more fraud with some of this.
Yeah. So in your conversations with other countries that have been sort of looked at skeptically at this hearing, have a look at how they're dealing with it, because some countries are doing a much better job, frankly, of a secure, safe, privacy-preserving digital identity. And they did not, for example, have hundreds of billions of dollars of COVID identity fraud. for COVID benefit identity fraud, and it's a real decrease in the amount of what the fraudsters can get away with to have a secure digital ID. So,
And a stronger digital authentication layer would have so many benefits, including other obligations that banks have. It could reduce their cost on anti-money laundering detection and really overall in our commercial economy.
yeah, McKinsey has estimated, I think, between 2 and 3% GDP loss from not having a high-quality digital identity. And so other countries are doing a better job, and so I think that's an area where you should pay attention to what other countries. All right, now, there are other aspects of artificial intelligence that are, going to be huge. During the last, years, when I was chairing the AI task force that we'd set up in this committee, we were wrestling with sort of bias-type problems that happen when you just take a credit history and you put it into a neural net that's incomprehensible, and out comes an answer. We're now going to be facing really even more complex ones where the next generation of AIs learn from their experience.
Yes.
And so it's like a child. You raise your child perfectly, you make sure it's behaving properly, then you send it off into the world with no guarantee that it won't come in contact with things that make it become evil. So how do you view the increased sort of surveillance you're going to need on AI after it's been released in the wild?
Yeah, I think there's a lot of questions you all have to answer. We have taken the view that it is important that existing law not be sidestepped on this. Because at the end of the day, if there is generative AI making representations, communicating with consumers, that has to be truthful. When it comes to all sorts of uses, the existing law still applies, but there's a lot we have to do on this.
Yeah, when you figure it out, please let me know.
Yeah.
Yield back.
The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Mr. Chairman. My good friend, Mr. Williams, over here often starts some of the discussions by asking whether you're a capitalist or a socialist.
As I mentioned, I think I've appeared before Congress 25 times and have mentioned every time I'm very much a capitalist.
I appreciate that, but I was curious, I would assume then that you believe the banking industry should be a for-profit industry.
Yes, and I think the banking industry is just as essential as our communications infrastructure,
Okay.
as our electric grid. We
Mr.
need
Chopra,
it.
the actions that are completely different, though, than what you say. During your tenure at the Bureau, the administration has spoken of or taken actions on banks' operating expenses, the fees institutions can charge, interest rate caps on credit, increased capital requirements, and of course, interchange fees, contracts between private entities, just to name a few. You even sought to increase your control over the credit reporting agencies and therefore who can get a loan. Taken together, we're looking at massive losses of revenue, loan and other credit losses, as well as very large additional costs of compliance. All of this results in higher costs and fewer banking services for customers and fewer financial institutions to provide those services, all the while giving the government more control over our personal finances. So it begs the question, at what point can we just publicly recognize that you and the administration believe that financial services should be a utility provided to the public by the government?
Well, nothing we have said has suggested that we want a lot of competing financial firms. And
Well,
if you
Mr.
look at the
Chopra, you say-
profitability of
excuse me,
do you mind if I finish on this? If you look at the profitability of the finance industry, we've actually seen a way in which they have been able to be robust and create new products and new revenue.
Director Chopra, what's happening is the regulation is running downhill and choking the small institutions. You sit on the FDIC board, do you not?
I do.
You see the mergers and the continued consolidation of the industry, do you not?
We do review merger
I
applications.
just had a meeting this morning with Federal Chairman Powell. He talks about the consolidation. It's there. So it begs the question then, if you see this, what are you doing about it?
Well, we should have a discussion actually about consolidation because there's a few places where I think it has driven. And one of the ways in which is some institutions get preferred cost of funding advantages because of perceptions
Okay,
about that.
so you
there's-
recognize the problem. Have you taken any actions whatsoever to relieve the regulatory burden on small banks?
Well, one of the things we have done is tried to make sure we are making our supervision fit for the actual risks. We have shifted much of our supervisory resources to larger players.
Okay, you said on
increasingly in the
FSOC too,
non-bank.
do you not?
I do.
Basel III is coming along. That is a detriment to all of the small businesses, small banks, and everybody else. It's going to hugely increase the costs. Can we get your support of trying to minimize the impact of that regulation on small banks?
So just to be clear, the proposed rule, as I understand it, that the agencies have proposed applies to banks with $100 billion or more in assets.
Director, I just got done talking to some banks, and they were telling me the regulators are saying, look, we know it starts at $100 billion up, but get ready, it's going to roll downhill. The banks are looking at it from the standpoint that if they don't comply with it, there's a wink and nod going on here with the regulators that we've got to be able to live with as well. And what happened is you're chasing consumers away from banks because banks are constricting services to the online lenders, offshore stuff, where it's not regulated. I want to quickly get to one more quick question I've got here for you with regards to a letter that I sent to you in Department of Justice with regards to warning the creditors that unnecessary and overboard consideration of credit applicants' permanent residency status could violate the Equal Credit Opportunity Act despite consideration that the criteria being expressly permitted under the ECOC's Regulation B. And I'm concerned that by what you're doing, you're adding a lot of confusion to the situation here. I know you addressed some of this a while ago, but I'm very concerned about the confusion here. We haven't got a response to our letter yet. And to me, it looks like you're in direct violation of the Know Your Customers law. Can you explain your position on that so it's not in violation and that there is no confusion for the...
Mr. Chairman, may I answer this? I'm out of time, but
You got 4 seconds.
yeah, may I answer?
You did everybody else. Go for it.
No, okay. I was going to say that, of course, the Know Your Customer requirements absolutely are the initial part of the process. The Bank
is the
Secrets Act
law.
requires for a non-U.S. person to collect certain documentation about it. There should be nothing that is in conflict of it. The guidance that was issued explicitly allows the consideration of immigration status, but I take your point if there is confusion, and we will respond to you.
Well, if there's confusion, the law should take precedence, which is KYC, not your joint statement.
Oh, of course. Oh,
And if
KYC,
you'll respond
of
for
course,
the
has to
if
be.
you'll respond for the record.
Thank you. I yield back.
We'll go to the gentlewoman from Ohio, Mrs. Beatty.
Thank you, Mr. Chairman and Ranking Member. And good morning, and thank you, Director Chopra, for being here. And thank you for taking your time to testify today and for all the work that you do at CFPB to protect our consumers. And let me join others in thanking you for traveling and listening, attending town halls, and going far beyond. And certainly, I have benefited from that. Very proud that a few months ago, you were in my district in Columbus, Ohio, meeting with consumers, small business owners, and not only did you come, you stayed, and I think almost missed your flight to answer all of those questions. And I really appreciate that because we had a very productive roundtable. And I appreciate you taking your work seriously. I'm going to try to get through 2 questions quickly. Director, we know that the CFPB's recently proposed Section 1033 rulemaking invites public input on the question of whether the rule should cover EBT accounts. And certainly, as you are no doubt aware, and more so for some of my colleagues in the public, EBT account holders, Americans who rely on programs like SNAP to put food on their tables each month, constantly struggle with access to their account information electronically in a marketplace that is highly uncompetitive. My understanding is that Section 1033 rule aims to improve competition and ensure consumers have reliable access to their own financial data. Given these goals, it seems to me that it's critically important that financially at-risk consumers and their EBT accounts be included. In addition, the proposed rule gives account holders legally enforceable rights to access their data and creates new strong protections for data covered under the proposal. Now, we've seen a massive increase in theft from EBT accounts, and increased data access could help EBT account holders detect and report fraud. So I know that's a lot. So here's the question. Shouldn't the CFPB use this opportunity to give financially vulnerable customers control over their financial data so they could protect themselves?
So let me just say, I totally agree that those who are receiving EBT benefits and the transaction data they have, that is very valuable. We're collecting comment on that. I will share with you, and maybe we can talk offline. We're trying to figure out with the USDA and state and local governments, who really are the issuers of this, how it would work, because there's a slightly different way compared to bank accounts, but we're trying to work through it, and it's opened up some other issues about do EBT recipients have access to even knowing the balance. So there's a whole bunch of things that I want to look at there.
Okay, maybe we can talk offline on that. Let me kind of switch topics here and now go to 1071, small business lending rulemaking. You know, for decades, before coming to Congress, a very successful small business owner. And I know we have colleagues on both sides of the aisle who will always say, I'm a small business owner. I think it is critical for small business lending transparency rule that will help root out discrimination and ensure that small businesses have access to credit, to especially those that are owned by females, women like myself, or people of color. And I believe that some of my colleagues on the other side of the aisle who claim to be advocates for small businesses claim that this rule is too onerous for small lenders and are advancing legislation to actually rescind this. So I want to give you my last minute to explain to us what provisions have been built into the rule to accommodate small lenders and to set the record straight on how onerous the reporting requirements are. So tell us about the resources and to make us a little more comfortable.
So based on the comments we received, we increased the threshold pretty substantially. It exempts a number of small lenders. We reduced some of the collection requirements. We're providing support and implementation guidance on how to make it work. We're giving smaller lenders much more time to comply. We're starting with the very largest banks. So we really did our best to implement this law with fidelity, and I hope that we can really see the benefits of it over time.
I know my time is up, but let me just say, some of those questions came from Democrat and Republican small business owners. Thank you, and I yield back.
The gentlewoman from Missouri, Ms. Wagner, is now recognized.
Thank you, Mr. Chairman. Director Chopra, the CFPB's credit card late fees proposed rule attempts to help a small number of credit card customers at the expense of a vast majority of others. Cardholders who never pay late, which the CFPB's own data and report indicates is 74% of all Americans with credit cards, will not benefit from the reduced fees. And according to the proposed rule, they could experience, and I quote, higher maintenance fees and lower rewards. The Dodd-Frank Act requires the CFPB to consider the cost of its rules. How does a rule that, by the CFPB's own admission, would help only a small number of consumers while increasing costs for cardholders across the board survive a cost-benefit analysis?
So respectfully, I think the analysis suggests a number of different permutations, but in the Card Act, there is a statutory prohibition on fees that are not reasonable and proportional. So what we are doing is we are evaluating the Federal Reserve's—
Did you do a cost-benefit analysis?
Just if I could, we are evaluating that first 12 years of that rule. And what we're trying to do is to make sure that those firms are able to recover their costs, are able to really collect the fees, they can, but not necessarily.
Why should responsible cardholders who pay their bills on time and typically never pay late fees be forced to subsidize frequent late payers?
Well, if you look at actually the profit and revenue models of the card issuers, I don't think you'll see that subsidy occur.
It absolutely does by virtue of the rule. Director Chopra, if this
No,
credit
actually,
card
I
late
would just
fee,
respectfully
my
say that-
time,
yeah.
respectfully, Director Chopra, if this credit card late fee proposal goes into effect, costs for consumers will increase, not because card issuers want to increase costs, but because they are required to do so. The prudential regulators require banks to manage and offset their credit risks, which banks would be required to do so by taking action such as raising APRs, eliminating rewards, reducing the amount of credit extended, or even restricting who it's extended to. How has the CFPB accounted for actions that credit card issuers will be forced to take properly managed credit risk and other prudential regulatory requirements?
This is a good question. So with respect to the proposed rule on late fees, we do know that credit card issuers engage in risk-based pricing. That's the vast majority of the market. In other words, they develop a price that's specific to a person. They don't just have one price that everyone does. So inasmuch that someone is engaged in, not paying, they can substantially raise their rate. They can take all sorts of actions, lowering their
They
credit
will
rate.
have to by virtue of the rule and by virtue of what the prudential regulators are doing in terms of safety and soundness. Did the CFPB engage with the prudential regulators when preparing this proposed rule to ensure that card issuers remain able to meet their safety and soundness obligations?
Yes, so as part of how we think about...
You're telling me that you engaged with the prudential regulators on
Yeah, I'm
this?
saying yes.
Okay.
I mean, yes, we do. When we
Then I don't understand. Let me get to my question. Then how, if you engaged with them, how can the agency justify proposing a rule that would implicate these safety and soundness obligations with, I don't know how you
Well, again, as I
justify
just
it.
mentioned, the way credit card issuers originate, they can engage in risk-based pricing. So they're able to raise rates for
Yes.
customers who are risky and lower them for those who are less risky. They use a lot of data in order to predict. They have complex scoring models. So we certainly try and look at all the factors that are driving pricing. What we do find right now in the credit card market is actually that rates have increased beyond what interest rates have been. And so we're looking at all of those dynamics all the time. And I'm truly happy to talk through this.
You are taking and taking responsible cardholders who pay their bills, sir, and on time, and typically never pay late fees, and they are forcing them to subsidize frequent late payers. And I see no cost-benefit analysis that says otherwise in this. This proposal is yet another example of the Biden administration's seeking to score political points rather than protecting American consumers. And, Mr. Chairman, I yield back the balance of my time.
Gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. I want to thank you and the ranking member for holding this important hearing. And see if I can move over a little bit, Director, so you can see me. Not that that makes a difference. Again, I want to thank you for testifying today, and thank you for the great work that you and your administration to protect the consumers in my district and across the country. Since 2011, the Consumer Financial Protection Bureau has protected consumers from unfair, deceptive, and abusive business practices. To date, the CFPB has returned over $20 billion to 205 million consumers. The Bureau is delivering results for students, veterans, and many other Americans across the country. And I appreciate that, and so do the polls. Notably, according to a recent nonpartisan poll, over 82% of Americans support the CFPB at its mission to protect consumers in the financial marketplace. And I have to tell you, from my district, that seems to be correct. I get so many compliments from the work that you've done and your Bureau has done. I know it's tough. I know it's tough sometimes up here not being able to answer all the questions because you don't get time, but I appreciate the work you've done. Now, the last question you didn't have enough time to answer. Is there a subsidy then from the people who pay their credit cards on time and those that don't?
No, There is no forced subsidy from one group to another. We are trying to follow the law and be able to implement that faithfully. And we must understand, underwriting is increasingly individualized. It is not one price that anyone pays. It's risk-based.
Same thing happens in insurance, as you know.
Yes.
Absolutely. So I appreciate that. Now, in fact, one of the things I do want to talk about a little bit, and it's been talked about here, is the cost benefit. How do you determine that, for example, discrimination against women? How would you weigh that? How many hours or what price is it against the discrimination that a woman feels, the humiliation, the opportunities that are missed? How do you weigh that? Because that's been brought up here and hasn't been explained, as if a woman that is discriminated against, all of a sudden, because she lost $1,000, you have $1,000 worth of time over here. It's an equivalent. I don't believe that, personally. But how do you weigh that?
Yeah, when there was widespread illegal mortgage foreclosures and there is, an attempt at cost-benefit analysis, I believe one of the takeaways was that the children in the home of an illegal foreclosure actually lost 3 grade levels. I may not have that exactly right. You're right that it's very hard to put a price. We did a rule to implement legislation you all passed on survivors of human trafficking and repairing their life. It's very, very hard to put a price, on that. But again, we do try our best to make sure we're limiting costs, but sometimes the benefits when it comes to getting your life back are extraordinary.
And I hope you keep that in mind, because I know there's a lot of pressure to just do a simple cost-benefit analysis, dollars and cents. It doesn't take into account the family, the humiliation, the standard of living really that we all have, the belief and faith that we have in government, and maybe a lot of us in God and other things, because you have to have right and wrong. I believe still there is right and there is wrong, and sometimes to do a right costs a lot. So I hope that you keep that into account instead of just some crude cost-benefit analysis. I do want to talk a little bit about AI. It is something that scares me. To be honest with you, maybe I've seen too many darn movies now about it, but it does seem like something that, is, as Mr. Foster said, unleashed into humanity, could do great damage, especially our financial system. Could you comment on that?
Well, I certainly think the financial system, especially when it's highly automated, which it is, when you introduce very opaque algorithms into it, I think there is some worries about systemic risk of that, the extent to which it could create, tremors could turn into earthquakes. So I hope that you all can be thinking about all the various ways that there could be risk created. Now, AI in some ways in financial services have been used forever.
For sure.
Credit scores, other things. We've got to make sure some of the existing laws on the books are being followed, and that's really what has been our focus. It's a much longer discussion about how we deal with generative AI and fraud, the lending algorithms, but we're trying to make sure we're beefing up our technology core so that we really understand what is going on before it's too late.
So my time is up. Thank you. I yield back.
The gentleman yields back. The chair now recognizes himself for 5 minutes. Director Chopra, let me start with your policy statement defining abusive acts or practices. Do you believe that financial services companies should be held liable for not complying with novel guidance or regulations that you have only recently published on a retroactive basis?
No, and in fact, the abusive policy statement, which really was an attempt to try and avoid situations where people didn't know.
Yeah, no, and I appreciate that, and you've said that before in this committee. I do appreciate that. So can I take it from your testimony that your policy statement will only apply prospectively?
Well, the issue is that the statute, though, has always existed. But
Okay, fair enough. Reclaiming my time, I am generally glad to hear what you just said, because I don't think it's fair to punish companies for operating within the boundaries of the law at the time the company was engaged in an act or practice that was lawful at the time, even under the pre-existing statute. I do, however, plan to introduce a bill that ensures that the Bureau does just that and does not try to retroactively apply new requirements onto activities that occurred in the past. And I would appreciate your input on that and working with me on that legislation to make sure that we're achieving our mutual goal.
And you know I want this to be durable and not ping pong.
Right,
and
great.
Not, sorry. Yeah.
Great. 1071, Director Chopra, if a small business begins a loan application process, can a lender under your 1071 proposal disclose to them that they are required to collect information under the direction of the federal government?
I need to look at the specific regulation, but my understanding is that even the model form makes very clear that this is a government requirement.
Okay. Does a small business loan applicant have the right to refuse to provide this data under your proposal?
Yes, it's actually not under the proposal, it's in the statute.
Great. I agree, it is in the statute. And so, under 1071 and under the statute, small businesses are not legally obligated to provide data in connection with any application of credit. But do you believe a small business owner should know why an institution, before any underwriting occurs, is collecting demographic information about them?
If I understand your question, I think, yes, that's right. And in the Home Mortgage Disclosure Act, I believe also there's a similar type framework I need to check.
Well, do you recognize that if a small business owner fails to understand why the data is being collected, it could lead to confusion and misunderstanding and potential liability for a financial institution? In other words, if they're asked to disclose their race or their ethnicity or their LGBT status before underwriting occurs, and then that loan application is denied, that could lead to confusion as to the basis for the denial of the application. You understand that?
I understand that.
Yeah, and so based on your response, I believe you would agree with me that providing a simple document to consumers or small business owners explaining all of this would help clear up confusion in the small business lending space. And Chairman, I'm asking myself for unanimous consent to submit for the record a potential questionnaire crafted by the Kentucky Bankers Association that would do just that without objection. Director Chopra, my constituents who provide small business loans in my district in Kentucky tell me that your 1071 rule would force them to exit small business lending and will therefore decrease availability and increase the cost of credit for small Main Street borrowers. I believe this questionnaire could help clarify the need for, or the lack of any need for, this data collection effort and reduce incentives for firms to exit the market because of fear of legal repercussions. Final question, Director Chopra.
By the way, I'm very open to that.
Okay, I'll share with you, and I appreciate your feedback. Final question is about funding in the Supreme Court and what the Supreme Court is about ready to do. Did you see that the FY24 Financial Services General Government Appropriations Bill that we just took up in the Congress, that the Congress funded the CFPB in that bill at current levels? Did you notice that?
I did.
And did you notice that Republicans, the Republican majority with Democrats, voted down an amendment that zeroed out the CFPB's funding?
I didn't catch that, but your colleague mentioned it.
Yeah, so, I mean, clearly some Republicans voted to zero it out, but that amendment failed. I want you to take notice of that, and I want the Supreme Court to take notice of that, because it demonstrates that the Congress is not about eliminating consumer protection or the Bureau. It is about upholding the Constitution and the separation of powers. And if our bill were enacted, the agency would continue to operate. The only difference would be that Congress would oversee the agency's spending in the same way it does for most other consumer protection agencies, and I believe it's time for Congress to regain its most important oversight tool, and that is the power of the purse. And with that, I will recognize the gentleman from Illinois, Mr. Kasten.
Thank you, Mr. Barr. Director Chopra, great to see you again. I want to follow up on the conversation we had last June. We talked at that time about the 2022 complaint bulletin that had been issued, looking at complaints on digital assets that I think specifically said, quote, fraud, theft, hacks, and scams are a significant problem in the crypto asset markets that appears to be getting worse. I'm just curious, in the last 5 months, things getting better, things getting worse, or about the same?
You know, I don't have a great answer on this. It can often be difficult to determine. We look at our complaints. I will say that people have lost a lot of money through hacks. Yeah. They've cleaned out there. And another thing is that it used to be gift cards. People would ask someone to purchase a gift card in a fraud context, and now it's often, a new technology like this. So it is something that the Justice Department, others, we're trying to get especially when it comes to targeting the elderly.
Well, I appreciate the confusion, and part of the reason I asked the question is we've seen a lot of public actions by Treasury, by the Justice Department, of course, the Binance news and the shutdown that's there, and obviously a lot of information will come out of there. While we were sitting here, I think the Treasury Department just announced that they're sanctioning Sinbad. That's a mixer that's being used to launder stolen assets, primarily to fund the North Korean nuclear program, as far as I can tell, from the public reporting. The Binance reporting said that the platform was being used to fund child abusers, sanctions evaders, a whole host of bad terrorist groups, and remarkably never filed a single SAR. And I'm not ranting to criticize them, but I'm just curious if that's a sign that we've got this under control, or are we just getting at the tip of the iceberg to go through and
I think when we talk about new uses of data, and certainly when it comes to AI, digital assets, there's all sorts of ways that we constantly have to think about how it could be misused and not just.
Can you just on that point, in the 2022 report, you talked about the use of crypto for pig butchering. Can you just explain for the committee what that is?
Yeah.
Given as it's related to this thing about, I guess it's
so
like high-tech gift card.
One of the ways that, including for older adults, a major way in which people are defrauded is often through romance scams, including through online dating websites, social media. And pig butchering is the concept of building trust over time at the end to ultimately wipe them out of their financial assets. So you see, unfortunately, a lot of that, and it can be very challenging, particularly when the fraudster has so much information about the target that they might be able to really trust.
Well, this shouldn't need to be said, but I'm proud to be said that we have a bipartisan opposition to pig butchering, to funding North Korean nuclear programs, to funding Hamas, to child trafficking. I think all of us on this committee want to make sure that we stop those. I am troubled by the fact that there is a common nexus in all those, which is crypto networks that are used to evade anti-money laundering rules. And I think we on this committee have some accountability to do with the fact that just within this term, we have passed 2 bills, the majority's passed 2 bills on a straight party line basis that would actually limit the ability of regulators like yourself to pursue anti-money laundering rules, to even have any authority to go after folks who are using unhosted wallets, these cryptographic assets. And if we genuinely oppose these things, we should stop the ways they're getting used. I'd also just want to raise a concern with some public reporting that's come out this week that Chair McHenry has been threatening to hold up the Defense Authorization Act unless we get a crypto-friendly bill, which is not going to make this better. And there's also been some public reporting that perhaps the currency will be to take out some protections against fentanyl use, which of course has also been listed in a lot of these reports as one of the common uses of cryptographic money. I realize this isn't your concern, but I want to thank Ranking Member Waters for her efforts to block that. I want to thank Chairman Brown and the Senate for blocking that and just urge them to continue to do so because we do need a fully funded Defense Authorization Act. We do need to make sure that our financial regulators have the tools to shut down money laundering. And my goodness, we'd like to put a stop to pig butchering, terrorism, North Korean nuclear programs, and child trafficking. So thank you, Director Chopra, and I yield back.
Gentleman yields. Let me remind members to refrain from referencing the chairman when he's not in a position to represent his side of the story on that and represent his views in response. With that, the gentleman from Texas, Mr. Williams, is now recognized.
Thank you, Mr. Chairman. Director, good to see you again. Consistently, you have come before this committee saying you would protect the interests of small business. You've said that today. However, since you joined the CFPB, your agency continues to add burdensome requirements without consideration of their impact on small business and small lenders, and you know I am a small business person. For the past 6 months, I've been consistently hearing from small and community bankers back in my district in Texas and across the country on how unprepared and terrified they are about the CFPB's Section 1071. Small business data collection rule is what it's known as, and small lenders are concerned that the complicated reporting requirements, which add 81 new data fields, will tie up loan officers and increased compliance costs, ultimately forcing them to pass these costs down to who? The customer. So furthermore, small lenders are worried this rule will push the industry towards a standardized small business loan product and kill relationship banking, which all of us are familiar with and have grown up with. This overly burdensome rule will limit the bank's lending abilities and make it harder for small businesses to access the capital they need. Now, I've been working with members of this committee and the Senate to push back against the rule, and I'm glad to say that, see that our CRA is coming to the floor for a vote this week. So it's critical that we pass this bill to overturn the rules, stop the regulatory overreach, and protect Main Street America. So this will be an easy yes or no answer for you, I think, Director. Congress is elected by the American public, and you are an appointed bureaucrat. So the question is, will you respect the views of the American people and overturn the 1071 rule should both chambers vote in favor of nullifying this rule? Yes or no?
Well, if it's enacted into law pursuant to the Congressional Review Act, of course we will comply with that.
Thank you. The funding structure of the CFPB minimizes congressional oversight and budget authority and instead relies on allocations from the Fed. This unconventional funding approach has sparked numerous legal challenges, raising concerns about the Bureau's lack of transparency and accountability of the American people. This funding mechanism is vastly different than other federal banking agencies. In order to have a check on the CFPB's power, it is imperative that your operations be subject to congressional operations or appropriations. So, Director, while we wait for the court's decision on your agency's funding, how are you ensuring that you are remaining transparent and accountable to the American people?
Well, respectfully, we try and do everything we can with respect to our spending. We have not only complied with the statutory requirements on audits, providing reports, we have tried to answer all sorts of questions that people may have and frankly taken a lot of feedback. We have also looked very carefully at spending that can be eliminated. We have spent below our budget cap that is given to us from the Federal Reserve and not even requested the full amount. So we continue to look at how we're going to have a workforce that can help us deliver what Congress said. But of course, we await the Supreme Court's ruling. The CFPB, the Fed, the OCC, the FDIC, others are funded very similarly. So we're all looking forward to getting a conclusion to that issue.
All right. The CFPB has indicated that they are in the pre-rule stage of creating a new overdraft rule that would reclassify overdraft fees and finance charges. This proposal is widely unreasonable and burdensome for consumers and providers. Overdraft is a key tool that allows consumers to withdraw more money than is available in their account so that they may make a payment with these temporary funds. So with the rising cost of everyday needs due to the Biden economics that we see today, this feature is helpful in situations that are due because of Bidenomics, and this feature is helpful in situations where a consumer has unexpected expenses or delays in income. So overdrafts allow them to continue with a purchase of whatever they may need. So this safety net is a key for consumers and must be protected. So, Director, is the CFPB actively working to eliminate overdraft programs that consumers rely on to meet day-to-day needs like groceries or other essentials?
As I've shared before, we do believe that all forms of credit, also overdraft services, they have a role to play. Our focus has been to focus where it has been illegally done, and we have received requests to look at rulemaking to provide clarity, but there is not an effort to eliminate, that need that you share.
Okay. All right, thank you, and I yield my time back.
Gentleman yields. The gentlewoman from Texas, Ms. Garcia, is now recognized.
Thank you, Mr. Chairman, and it's always great to have you with us. Director Chopra, you're always a breath of fresh air, always willing to respond to all the questions and with such candor and precision. I was a little taken aback by my colleagues' comments that you're running your agency in a lawless manner, acting outside of the law. I feel like I know a little bit about the law, being a lawyer and a former judge, and I think if you were doing anything lawless or outside of the law, I'd probably be the first one to raise the red flag. So can you assure the public today and those listening that you are in fact following the law and doing everything that is mandated by Congress?
Yes, and we take those congressional mandates seriously. We are implementing each and every piece that has been required of us, and we just take that responsibility seriously.
Right, and as you responded to an earlier question, if the law was passed, it is signed and it's a law, of course you're going to follow that law.
Yes, and I actually would recommend you putting deadlines on that because it makes sure that it happens. We do have issues with other agencies where it's passed and never gets done.
Well, thank you. It's reassuring, and I had full confidence that that would be your response, but I thought it was necessary to put that in the record. Because under your leadership, the CFPB has taken unprecedented action to combat junk fees and medical debt while holding credit card reporting companies accountable and curbing predatory lenders. As always, you've been there up front with a commitment to protecting our nation's consumers. I would like to begin by discussing your outstanding efforts to tackle the junk fee situation. Prior to today's hearing, I reviewed a useful fact sheet about CFPB's whole-of-government approach to addressing junk fees, and it briefly mentioned the CFPB's enforcement actions against MoneyGram, an international remittance provider. This was of great interest to me because, as you know, my district is Latino. It's 77% Latino. And many people in my district either know someone or have relatives in Mexico. And in fact, Texas is has the second highest amount of remittances that go to Mexico within the United States. In 2021, in fact, $7.7 billion in remittances were sent from Texas to Mexico, making up 15.9% of all transactions. In 2012, the CFPB implemented its remittance rule, requiring companies that offer remittances to provide consistent disclosure regarding the price of a transfer before the consumer makes a payment. Less than 10 years later, consumer and immigration groups have found that U.S. consumers lose approximately $8.7 billion in hidden fees due to the exchange rate markups. In June of 2023, you testified before this committee and recognized this issue, where remittances are advertised at zero cost, but a hidden foreign exchange markup is added. These junk fees impact a large number of my constituents who send remittances to their families. Director Chopra, what action has the CFPB taken since June to eliminate these junk fees within remittances, or what other action can we expect from you soon?
Well, let me first share that remittances are such an important market for us to be focused on. We also know that remittances are a key part of, U.S. national security policy as well, given the volume that takes place. So let me share this. I do share your concerns about advertising, especially that something is free, when in reality it has a big cost. We've actually taken a number of enforcement actions over the last 2 years, including fairly recently, to go after violations of the remittance rule. I think as more consumers are doing this digitally, we're going to need to evaluate whether those rules need any updates so that they're fit for the modern times. We do see that there's many people who are sending them through apps, and we want to make sure they can compare, get a good offer, and really know what they're getting into.
Oh, great. Also, I read your semi-annual report, which notes that the efforts to diversify in terms of your contractors, with 43% of contracts going to MWBE programs. However, when we looked at the breakdown of the contract, it only showed 0.2%, not even 1%, 0.2% of the dollars spent went to Latino-owned businesses. What step is the CFPB taking to ensure that Latino contractors are at the table and get some of those contractors?
Yeah, so we have our Office of Women and Minority Inclusion that is required to oversee that. I'm happy to answer more questions for the record.
All right, Mr. Chair, I'll submit those in writing. Thank you.
Thank you. The gentlelady's time has expired. The gentleman from Georgia, Mr. Loudermilk, is recognized.
Well, thank you, Mr. Chair. Mr. Chopra, thank you for being here and willing to answer questions. One thing is, I agree with some of my colleagues. There's some things that we share that's important, and that's data privacy. That is something I've been working on since I've been here in Congress, and it seems that we continue to go backwards, not forwards. And I'm talking about the federal government in general. One of the things about data privacy is it is intrinsically tied to data security. And one of the best ways to protect data is to not have it. You don't have to protect what you don't have, so only collect what you need, and that's another conversation for another day. I want to ask about the data breach that happened in February of this year. Obviously, you're aware of this as you've communicated this in the past. But I do want to ask some questions about that, especially as early as 2014, the Bureau was warned that vulnerabilities in its information security program put it at risk of a breach. And the latest OIG report indicates the Bureau hadn't addressed any of these cybersecurity action items that were previously recommended. Have you implemented any of these recommendations since the publication of the report? And this report was February of 23.
Yeah, so we have gotten from our FSMA audit, our OIG, and our third-party review, a whole slew of things that over time we've been able to successfully implement. I want to give you the appropriate detail of that, and we do know which ones have been fulfilled, and we work with the IG to see if it's also to their satisfaction. But let me just share that, of course, the misappropriation of data that occurred earlier this year was extremely serious. One of my reflections on it is that we're talking about insider threat.
Yes.
And so part of what we're doing is not just making sure the systems are not penetrable from outside, but also those inside making sure that there is limited access where it only needs to be. Now, in this case, it related to, there will be employees that have access to information. We've made some system changes too to limit the information that is accessible. So I can confirm that the issue was not related to any sort of, intelligence operation by a foreign state actor. The individual is no longer employed at the agency, but there's work to do as it relates to insider threats across
right. And in a lot of cases, access by foreign actors, criminals, come as the result of improper actions by an internal operator, as we saw with Equifax.
Yes.
That happened a while back.
And that ultimately we know it was not just Equifax, but Marriott, Office of Personnel Management. It was, actors affiliated with the Chinese government that we have to make sure that we know this data is used for all sorts of purposes.
And so one of the things, and I just want to ask you specifically some of these questions and bring it back up. You may not have the answer now, but if you could respond. There's specifically 3 in the OIG report, which was, the first was develop and implement a cybersecurity risk register and associated process to identify and manage organizational-wide cybersecurity risks. These were showing that they had not been completed by February of 2023, but the response from the Bureau was implementation in progress, and estimated completion is this year, and we're running out of time. So if the other 2, and I can provide these to you, all 3 of these, we'll provide them in written format. If you can respond where you are on these, I would appreciate it.
And so, on that one, we know that part of it was, I believe we were procuring a new system, and it would replace and implement something. So we have tried to also complete these in a way that is deliberate and also to the satisfaction of our audience.
I'm running out of time quickly. I need to ask this one. How and when were the victims of the CFPB data breach notified? Was it, Congress wasn't notified until May. Were the businesses or the individuals that potentially breached, were they notified at any time? And if so, was it before Congress or after Congress?
So we notified Congress completely pursuant to the guidance, and actually when we found out, we looked to see when the data may have left the system by the insider threat. So we went through the process of making sure everyone, we did the customer notifications, and we had to work with our supervised entity, because sometimes it was complicated. And my staff just shared that Congress was notified in March.
Right, but when were the customers notified, before or after Congress?
We actually didn't have their contact information in most situations, so we had to work with the institution.
Gentleman's time has expired.
Thank you.
The gentlewoman from Massachusetts, Ms. Presley, is recognized.
Good to see you, Director Chopra. I always smile when I see you because I actually know what it is that you do. I'm grateful for your service and certainly your resilience. You know, despite the destructive efforts by Republicans to sabotage the Consumer Financial Protection Bureau, I commend you on your work to support vulnerable consumers, from cracking down on junk fees and predatory lenders to working to remove burdensome medical debt from credit reports and protecting seniors against fraud. The CFPB's record speaks for itself. Now, I want to talk about the $2 trillion crisis that is student debt. You've heard the expression, like a dog with a bone. I'm no dog, but I am a congresswoman with a cause. And some of my colleagues may be tired of me bringing up student debt, but imagine how tired our constituents are of living with it. For borrowers who live in my district, the Massachusetts 7th, whether it's a father juggling part-time jobs or a third-grade teacher who spent a decade in the classroom making payments month to month, their financial institutions, or their situations rather, are as precarious now as they were 3 years ago when payments were first paused. And student loan servicers are not making it any easier. High wait times when you call, false information when you get someone on the phone, and wrong billing amounts when they ask for money. Just last month, Mohila, the largest student loan servicer in the country, proved its incompetence. 78,000 borrowers received the wrong information for the SAVE income-driven repayment plan. 153,000 borrowers did not receive a bill until after it was due. And for the ones who did, 21,000 borrowers received bills that were very high and far from correct, including some who received a bill for $100,000. Now imagine opening your mail and seeing a bill for $100,000. This is ridiculous, and it's proof that the CFPB's work is more critical now than ever before. Director Chopra, could you describe what steps the Bureau is taking to protect student loan borrowers from the gross incompetence of student loan servicers?
Well, certainly, those servicers, just like mortgage servicers, impact people's lives so much. You know, we have seen over the course of the past 15 years illegal foreclosures and other harms in the mortgage market, but in the student loan market, a wrongful default or a major error, it can hit people so hard early in their financial life and eliminate their ability to even get an auto loan or do anything else. So we hold those companies, they may not be banks, but they have to follow the same laws. We are allocating real attention to this, including the return to repayment, because many of those servicers shrunk quite a bit during the payment pause, scaling up, and we will be releasing more information about some of our findings. We have taken enforcement actions, and it's very, very important that people are not the victim of an unlawful practice.
Thank you. And Director Chopra, what is your advice? Sort of consider this a PSA, if you will, to borrowers who are dealing with predatory student loan servicers, scammers, and malicious actors.
Well, certainly be very, very cautious about talking to someone who isn't the loan servicer. They may be using information about you in order to get you to pay something that you don't owe them. We also say if you're having trouble, please file a complaint. We're often able to get those individuals across the country fixes and sometimes clear answers on what really needs to happen. this whole thing has to work or there's going to be big problems.
Thank you, Director Chopra. You know, like many Americans, I took on student loans to pursue higher education, not because I wanted to, but because I had to. It was the only way. It took me over 20 years to pay them off while I was a caregiver to my mother and often working multiple jobs, including as an aide in the House and in the Senate. But I want an easier road for the next person. The people demand and deserve student debt cancellation. In the meantime, we must provide relief for our borrowers wherever and however we can, and that includes holding student loan servicers accountable for their incompetence. Thank you again, Director Chopra, and your entire dedicated team, and I look forward to continuing to work together.
Gentlelady yields back. The gentleman from Ohio, gentleman from Ohio, Mr. Davidson, is recognized.
Glad we got that right. Thanks, Director Chopra. Appreciate you being here. Appreciate your work on privacy. I've really enjoyed the prominence of the Fourth Amendment in this hearing, and I know you know that I share your fondness of the respect for privacy and the sense that it really needs a lot of attention right now. So I've been developing a bill called the Payment Privacy Act that would ban the sale or distribution of consumer financial data unless the consumer provides express consent. This consent would only be legal if the consumer can identify who will receive their data at the time the consent is given. We still have a few things to work out, but it is close to being done. And most notably, we're trying to make sure that enforcement and damages provisions match the impact of the data breaches. This is clearly something that you touch on with some of the rulemaking that you've been in process with, and I look forward to continuing to work with you and your office on that. So appreciate that. But as we talk about Section 1033 Dodd-Frank would allow, so one component of 1033, as we talk about 1033, one component of it would allow tokenized account numbers. And when making data available to consumer permission third parties, so they could tokenize it, kind of anonymizes the data in a sense. This means the account identifier would mask that identity from the third party. Has the Bureau considered any alternative approaches to protecting consumer account information?
Yeah, well, in many ways, Congressman, we also have to think ahead. I've talked to some of you on this committee about quantum decryption and the risk of re-identification. And so we want to think of ways that is timeless. So we're very open to feedback on what's the other alternatives. We don't want any sort of specific technology built in. But I do fear that if we don't make sure that the rule has some real data protections, it will be a haven for misuse.
Well, and I think that's the point of not just protecting the consumer privacy. They clearly didn't disclose it. This is a way to bypass the fact that they haven't disclosed it.
Yes.
And tech kind of escalates.
I see. That could sidestep it.
Right.
I'm sorry, I misunderstood.
And I'm also fond of zero-knowledge proofs for what it's worth, and this touches on a transition point to digital assets briefly. So, Director Chopra, former directors of the CFPB, Director Kraninger, previously stated that CFPB's authority over digital assets is murky at best because there's a lack of jurisdictional clarity. Given that the, quote, larger payment participant rulemaking attempts to sweep in digital assets, how do you see the scope of CFPB's role in digital assets, and in particular, with respect to protecting self-custody and privacy?
Yeah, so it's really when it's being used for a consumer payment. So we do have a lot of non-bank payment apps. To the extent to which they are using something that is just for a consumer payment, there is case law that shows that that's covered under the Electronic Fund Transfer Act, and that's what we supervise for. So I think we've tried to be very cautious about this, and also in as much that you are legislating on it, we're happy to provide any input on it, but when it comes to that, we're really trying to address those large payment apps that, we have to make sure that are following the same set of laws that the banks are.
Right, yeah. So the general trend is to make everything account-based, and one of the best things is self-custody. So if I have cash, my identity is pretty well protected, and if I want to exchange that with someone else, then we don't really have a lot of risk of data breach or privacy issues, we payment. Now, for many of my colleagues, that level of privacy is too much privacy. They like the spying on people features of account-based systems. And I'm really concerned that we protect self-custody, because that is at the core of privacy. It's the core of protecting your money, because someone's not skimming part of it for providing services unless you want them to. So one other thing that I just want to touch on is the last numbers I saw on Buy Now, Pay Later for Black Friday and Cyber Monday spending was $940 million. That's about a 42% jump over last year. The pros of Buy Now, Pay Later are really apparent. There's no credit check. It's interest-free up front. So if you want to buy something, say $200, and you pay $50 now, you can pay 3 more payments of $50 and do it. Does that start at some point, especially if you don't make that next payment, start to look a lot like credit? You did some work on this.
Yeah, so we're trying to make sure that those similar types of use cases have similar treatment. Buy Now, Pay Later is an option for many, many people, and you're right, it has grown and there's a lot more providers. I think there are some issues, some credit reporting issues, other things that we do need to keep thinking about.
All right, thank you. My time's expired. I yield.
Gentleman yields. The gentleman from Nevada, Mr. Horsford, is recognized.
Thank you very much, Mr. Chairman, and to the ranking member for this hearing, and thank you, Director Chopra, for returning to discuss the continued consumer protection efforts that your Bureau has undertaken since we last spoke. Americans everywhere deserve to have someone in their corner every day to keep a watchful eye on the financial sector and to protect hardworking people from discrimination and fraud. I was pleased to receive your report. In it, you identify 950,000 complaints that were received in the time period encompassed by the report, with an impressive 99% response rate from the respective companies. The CFPB is not just standing idly by, but actively securing redress for harmed consumers. Under your leadership, I've been glad to see the CFPB standing up for consumers, combating the negative effects of medical debt, ensuring that fair lending standards are adhered to, and holding bad actors in our financial sector accountable. I want to point to, though, the issue of the Office of Service Member Affairs and how they are working to address the growing number of complaints that members of our armed forces have regarding their consumer protection needs. As you're aware, in June, your agency reported that there was a staggering 66,400 complaints filed by service members in 2022 alone. This is a dramatic 55% increase from the prior year. Unfortunately, for my home state of Nevada, the volume of complaints from service members ranks 3rd in the country on a per capita basis. So, Director Chopra, your report on service member affairs shows that active duty personnel are 76% more likely to become victims of identity theft than the general population. What are your insights into why this may be the cause? What characteristics make them most susceptible to theft? And what recommendations do you have to further protect from this abuse?
Well, we have seen time and time again service members, active duty service members' personal data being weaponized. It used to just take the form of putting a fake debt on their credit report and bullying them into paying something they didn't owe. Now it's even getting more sophisticated. We see that all sorts of data companies are collecting information on military personnel. Identity theft is one piece. There's real national security implications. We don't just care about these families because, they serve our country. They are often the canary in the coal mine for everyone else, and that's why we put a lot of attention on it.
I'm glad you are. As you said, it does take attention away from national security. It has serious negative effects on morale and even interrupt their service if it's not addressed. So I look forward to working with you on that issue. Private identity verification companies are fortunately able to prevent some of these issues. So now I'm glad that while the CFPB has enhanced capabilities to protect these populations, fraudulent applications and identity theft can be disastrous for any American. As we look to continue to expand access to credit across the country, have you considered that these unintended consequences of your upcoming Fair Credit Reporting Act rulemaking could lead to more legitimate applicants being inappropriately rejected due to their perceived fraud risk by financial institutions?
Yeah, so we haven't proposed anything as of yet, but we're trying to look at all the ways that data could be used or misused, and ultimately look at the downstream effects. Absolutely, we're looking at all aspects before we propose.
Thank you. Dr. Chopra, I've also been pleased to see that the CFPB has brought about enforcement actions to curtail the unscrupulous actors in the credit repair marketplace. Unfortunately, in industry rife with malpractice, there are still bad actors operating in blatant violation of your recent court ruling regarding deceptive telemarketing practices. The Bureau should apply this decision uniformly across the credit repair space to protect our most vulnerable consumers from being scammed by products that will actually do little to improve their credit. Do you believe that there is a benefit to providing clear, consistent guidance regarding the telemarketing sales rules, advance fee prohibition in order to prevent bad actors from continuing to take advantage of consumers?
Yeah, and the telemarketing sales rule is not, while we enforce it, it's not administered by the CFPB. The FTC is the one that issues rules and guidance, but I think certainly as these scams develop, we can have a conversation with them about that.
Thank you very much. I look forward to continuing to work with you. I yield back.
Gentleman yields. The gentleman from Michigan, Mr. Heisinger, is now recognized.
Thank you, Mr. Chairman, and I apologize for my tardiness. I was in the Budget Committee testifying on our debt commission that I think is also another significant issue for us. But thank you, Director Chopra, for coming. I've got a couple of topics I want to cover this morning. I ask for concise answers on this. You've been employed by the U.S. government for about a decade, is that correct?
Yes, all told.
Okay, and holding several senior positions throughout that?
Yes.
Yeah, okay. You've served on the FDIC's Board of Directors since October of 2021, correct?
Yes.
Okay. Since you've been a director on the FDIC board, were you ever made aware of the July 2020 FDIC Office of Inspector General report on the sexual harassment charges that were happening at FDIC?
I can't recall when, but I did review prior to coming to the board all of those reports that the Inspector General and others had issued on a wide range.
Had the IG run you through those and the board? I mean, who made you aware of those?
Well, prior to being confirmed, I personally reviewed all of those for the CFPB and others as well to prepare. I do have periodic discussions with the Inspector General about that. And with respect to implementing any recommendations, the executives of the corporation do file periodic reports about where things are. So, we try our best to ascertain where the issues are.
Are you alarmed by the FDIC OIG's findings of underreporting and fear of retaliation at the FDIC?
Yeah, and in fact, at the CFPB, we actually implemented a number of new steps to make sure that there was many ways for employees to report these issues. As a risk management perspective, you want to be able to be sure you're getting these complaints, and every agency is trying to do.
Okay, well, maybe not every agency is trying to do that.
Yeah, well, I think I can speak for the CFPB.
Okay, well, so you're speaking for yourself, and you are saying, as I'm hearing, I'm not trying to put words in your mouth, you're saying you took your experiences and what you witnessed at FDIC, you're trying to improve CFPB's operations and those kinds of things, correct?
Well, sure, and other agencies. Yeah.
Sure, okay.
Yeah.
Now, I've been, and I think a number of my colleagues have been a bit critical of your role in ousting the last chair of the FDIC and sort of what happened there. Why weren't you as concerned or as aggressive with this particular chair?
Well, to be clear, the last chairman resigned. There was an issue about
Okay, there was significant palace intrigue behind that.
Well, there was a
that-
violation of law in my view and others, but I know
Okay,
that's not what we want to get
okay,
into.
violation of law. I mean, we've got some very, very serious charges.
Yeah,
with people at the FDIC, including this chairman, and whether he knew and whether he was involved or how he was involved. So why not take that same passion to the
Well,
FDIC?
Certainly, any type of these issues are serious. The board has created a bipartisan special committee that will have full authority to investigate it, to hire outside players, to determine was there appropriate actions taken, and to identify what needs to change.
Okay. I'm going to remind some of my newer colleagues, it wasn't that long ago we had another head of an agency, the FHFA, Mel Watt, our former colleague on this committee, who was before the committee to discuss allegations of inappropriate behavior, and it was a bipartisan effort then. I hope the discussion of the FDIC is a bipartisan effort now. As chair of the oversight subcommittee, I hold our government officials accountable, and I hope and expect that the FDIC chairman and others are going to cooperate fully. Let me turn very briefly here to a recent enforcement action of yours. Mr. Barr had brought this up earlier about the CFPB using the fine print, pop-ups, drop-downs, different sort of criteria as labeling that abusive. Now, in this instance, the company in question was following state laws in which they were operating in, and while your agency did not accuse the finance company of breaking any laws, you still went forward with an enforcement action. Last night I sent you a letter on this specific issue.
We did plead a violation of law in the complaints. Every enforcement action, and if it's being litigated, has specific allegations of what law is being violated, and that will be adjudicated.
Okay, well, last night, my time's expired. Last night I sent you a letter on the specific issue, and I expect to respond in a timely manner. Thank you, Mr. Chairman.
Gentleman's time has expired, and thank you. It's good work as Oversight Chairman. Gentlewoman from Michigan, Ms. Tlaib, is now recognized.
Thank you so much, Chairman. Thank you so much, Director Chopra. I want to talk about something that my residents are actually asking me about specifically. Of course, CFPB has been incredibly responsive with a number of fraudulent cases, issues that are coming up with folks' credit card companies, so I appreciate your team and your staff being so responsive to my team. They really are getting callbacks and feeling like they have an advocate in the CFPB. As you know, nearly 1 in 5 Americans, American adults, are burdened with medical debt. And this is something that I've continued to talk about with many of my colleagues here. You know, I feel like it's completely wrong to have medical debt weighed down on credit reports. And you and I know no one chooses to get sick, and I know you have personal stories yourself. But medical debt should not prevent somebody from securing a home or even education, basic needs. I've even had residents talk to me about the fact that they had to sell their home because of medical debt, or get another loan on their home because of medical debt. In my own district, we've had residents who are veterans, seniors, report challenging, just difficulty in paying $3,000 to $4,000 in medical bills, and then they're on a fixed income. And these are folks, by the way, that get their stuff garnished. They go after them, and these are people that are actually insured. Let's understand, they're not uninsured. They're actually folks with health insurance that are still facing a high burden of medical debt. And so for me, I was so incredibly excited that CFPB announced a rulemaking process to remove medical debt from consumer credit reports, which I also called for, you know, in my Restoring Unfairly Impaired Credit and Protecting Consumers Act. And so, Director Chopra, can you describe, because I think it's important for my colleagues, really, if listen to this, this is important, because even Chairman McHenry talked about the fact that he paid his bill and it still showed up, and the inaccuracy of debt that is showing up on people's credit report. I mean, collections are inaccurate, things are already paid, our medical service that occurred many, many years ago are all of a sudden appearing from decades prior on people's credit. It's really unbelievable, the stories that are coming from many folks. So can you describe some of the billing and collection practices that motivated CFPB to take action?
Well, what we saw is that the largest item of delinquent derogatory items on a credit report was no longer credit cards, no longer a normal loan. It was allegedly unpaid bills. And the very common experience was people say, I'm disputing this is wrong, And then they go through this endless paperwork process to do it, and we know this is not like a normal loan. This is a situation where there's a back and forth between the insurance company, the provider, the facility, and we have found very serious inaccuracies. And I think it has just raised the question about, given its limited or almost no predictive value in cases, is the credit report just a way to coerce someone to pay something they don't owe?
Exactly. And, I think you led a little bit on this, but your own research in CFPB found that using medical billing data on a credit report is less predictive of a credit risk or performance than non-medical collections. So there's no, I think, benefit in having medical debt be, on credit reports and weighing down on so many of our families that, from cancer to even folks that have, really awful car accidents and lead to so much health benefits, including, physical therapy. Folks told me that they have insurance, but it didn't cover, and years later, they're getting all this stuff showing up on their credit report. There's something that I talked to you about, and I really want to take a moment, and I know you may not have coverage over, but, right now, auto insurance companies are using non-driving factors, Director. And I talked to Secretary Yellen about this morning. It really has had a disparate impact on my residents. I mean, using the credit scores, marital status, education level. I just feel like that practice is a way to discriminate, especially when I see folks with DUIs but high credit score paying 3 times less than somebody with no DUI and a lower credit score. And I wanted to see if you had anything to say about that.
Yeah, well, you're right. We don't regulate insurance, but I think there are serious issues with how credit scores are being used sometimes. For many people, it just doesn't seem to make sense. I don't
know. Somebody with a PhD, Director, is going to be a better driver to. I don't understand the rationale that auto insurance companies use in this data.
Well, I think sometimes they'll say whether it's going to be their premium is going to get paid, but sometimes it's so variant. And again, we don't have authority over here. We just cover the credit report and credit score. But certainly, if Treasury's insurance office does further work on this, we're happy to provide information on it. The state insurance regulators, I know many of them are also wondering the same question.
Yeah, some states have done that, but thank you so much, Chairman. I yield.
Gentlelady yields back, and we will take a 5-minute recess.